All right, what's up, guys? Today I'm going to be talking about my day trading strategy that I use every single day, and maybe this will help you out and figure out what strategy you're going to use. Um, so first thing I look for is I look for the daily bias and determine if it's either bearish or bullish for the day. So that's the first step, and then I look on the 4 hour for that. So I look for 4 hour bias. So if it's in an uptrend, simple as that. If it's in an uptrend, it's bullish. If it's in a downtrend, it's bias or bearish. Um, Uptrend, uptrend is bullish, down is bearish. Simple as that on the 4 hour. And then I go into the 1 hour and I see if the bias is similar, but I don't really do anything off of that. I just kind of see where it likes to go. But first, the next real thing I do is mark out highs and lows on the 4 hour and the 1 hour. The reason I do that is because I'm looking for a sweep of that area to be a liquidity sweep. So this is what I do this before market opens, um, and way before I take a trade. The third thing I do is I wait till market open. I don't do anything until market opens. Even if I see a sweep, I don't do anything till market opens. Market opens, I'm looking I'm looking for a sweep of liquidity. How to spell it. I'm looking for a liquidity sweep. So if I'm bearish for the day, I'm looking for a high to be swept so I can go short. Next thing I do, look for a 1 hour liquidity sweep is what we want. So we're on the 1 hour as market opens. So 1 hour, um, 1 hour liquidity sweep um, after market opens. If we get that and then we get a sweep, I'm going into the 5 minute, into 5 minute, and I'm looking for a 5 minute retrace. So that would be, let me draw this out just so we can kind of see what's going on here. So let's say we have market, and then draw it's a little better. That's pretty terrible, but so say uh, market opens right here. Okay, I'm going in. It's kind of hard to do since I'm only on one time frame or something or like that, but I would mark this high out here, and then I would also mark this low out. But we see here before market opened, we'll say this is the 4 hour. It's kind of like a downtrend. It's pretty bad drawing, but this is a downtrend. I mean, we have a low here. We broke structure to the downside. Um, so I would be bearish for the day. And then you can see here, once market opens, we get this liquidity sweep. And then once I see that, I'm looking for a retracement. So say this line zoomed in. So this is the 1 hour. And then once we get that liquidity sweep, I'm looking for a 5 minute retracement back down and then another one back up. And then after that, I'm going into the 1 minute. So after the 5 minute retrace, go into 1 minute time frame. And in there, I'm looking for a couple confluences. I'm looking for a fair value gap. So if we have, let's see here, we'll draw this out. Say price is doing this, goes here, we get a touch into here, and then we get it back out. So we see this fair value gap here, right here. Price touched into there. Oh, we get a we get a 1 minute fair value gap. Look for fair value gap or order block. So you can see here we have this fair value gap, price touches into there, and then we get a break of structure down to the downside. Another thing I could have also looked for is a order block. So if price actually wanted to come back up and then come into this order block here and then come back down, see it tapped in this leg up before this leg down, and then we get a break of structure, I would also trade off of that. So looking for a fair value gap or an order block, then a break of structure, and then number 9, enter. Simple as that. And then number 10, set TP and stop loss. Pretty simple. First thing, you want to determine your daily bias, but you don't want to really go if your daily bias is bearish and the past trend has been bearish, you don't really want to go long off of that. If the trend has been going down, you don't want to go up. You want to kind of go with the trend and not against it because you're more likely to lose when you go against the trend. Next thing we want to do is mark the highs and lows on the 4-hour and the 1-hour because we're looking for a liquidity sweep of that area. And then we wait till market opens. Then we look for 1 minute. We're on the hourly time frame, and we're looking for a liquidity sweep of one of those levels. It could be a 4-hour high or low, or a 1-hour high or low, but just a liquidity sweep after market open. It could be before market open, but I like to see it after market open. Once we see that, we can hop into the 5-minute time frame here, and then we're looking for this 5-minute retrace. After we get this retrace, after we get the leg up, that sweeps liquidity, leg back down, and then a leg back up, we can pop into the 1 minute, go into the 1 minute time frame. Then we're looking for a fair value gap or an order block. Right here, we got a fair value gap and an order block, and then we get a break of structure. Simple as that. Then then you enter off that break of structure here, and say your take profit and stop loss. So let me show you an example here um, on the actual chart. So here we have Tuesday. I caught a pretty good trade on Tuesday. So we can see here on the 4-hour, overall bias is bearish. Um, just pretty simple. We're going down, and we never got to break a structure back up. So what's step 2? Step 2 is, well, step 1, determine daily bias. So we determine that it's bearish. Perfect. So then we go in, we're going to mark the highs and lows. So we have a high right or low right here. We have to move down, then a move up. Mark that as a low. Put that in green so it's a little easier to see. And then we don't have another 4-hour high till right here after market opens, but we do have one way back here. So we'll mark that out just to see if price goes that high. Just pretend we don't have that there. It's kind of hard to do, but and then after that we're going to the 1-hour. We're going to mark. Excuse me. We're going to mark those highs and lows. So we have a high right here. We have a move up, then a move down. So mark that out, set in blue. And then we have a low down here, move down on the same level as that. So only one high. There's one over here too. We could mark out 2. Boom. All right, so then we're on the hourly time frame. Market opens right here at 9:30. Let's get rid of this. We can see we get a sweep of this liquidity. Perfect. So we're going into the 5 minute. And you don't have to wait for that candle to close. It can just be a wick because the candle's not going to close till 10. So once the 1 hour wicks up into there, you can hop into the 5 minute. Perfect. So where are we here? All right. So we're in here. Market opens right here, 9:30, this candle here. We got to push up into this, both this liquidity, this resting liquidity. Then we get a retracement here, another retracement, and then we're looking for another bullish candle out of there. So 9:55, and we get that there at 9:55. So at 9:55, we can hop into the 1 minute. Let's see. So in the 1 minute, we're looking for a fair value gap or an order block. So 9:55 is right around here. So you can see we get these two big legs up. But since we're bearish for the day, we're looking for shorts. So we're looking for a red fair value gap or an order block to short off of. So you can see we get a bunch of fair value gaps here, but those are going the wrong way. So don't really need to look into those. Um, we get this one here. Price just ends up pushing through. So it doesn't just wick into there. If it pushes through, you don't want to trade off of that. So didn't trade off of there. We do get this one here. Let me mark that out. But price never ends up pushing into there. So didn't need to, didn't trade off of that because price never wanted to fill orders off of that to help confirm our bias. Move down a little bit here to 1029. We get this fair value gap here. So you can see here, price pushes into here, and then we get legs, couple legs down, or this leg down, but we never get a break of structure. And price actually ends up closing outside of this fair value gap. So normally that fair value gap will be invalidated, but you can see price here kind of just wanted to stay in this fair value gap and was filling orders both ways. Um, and then I saw this movement here, and then I looked here and I saw this order block here. So I marked that out. I have an order block right here. Price actually pushes into there, gets rejections off of there, never really goes above there, never closes above it. We get rejections off, and then finally we get a break of structure. We have this low here. We get a break of structure right here. So we can enter there. We get this, we have this fair value gap that we kind of broke through, but then we have this order block we get rejections off of and get a break of structure. So enter there. And then where do we set our stop loss? So you can see here, price actually ended up pushing up higher. If we set our stop loss right to the top of that order block, we would have been stopped out. Um, but the reason for that is, and the reversal there is because that's where people have their limit orders and limit sells. So when price hits there, people are actually shorting just because they're it's above this liquidity here and it's the top of the order block. So there's a bunch of orders resting here. So I actually moved my stop loss up a little higher. Actually, I believe I actually put it up on here for this trade, just because the risk to reward was so good for this trade here. So then where do we set the take profit? So we can set take profits at lows or highs, um, on high time frame lows or highs. So we can go in here and you can see here Market opens right here, but after this candle closed at 10, we get this low, so we can mark that out. And then we can see price actually ends up going all the way down there. So we can move our stop loss down to this low. So let's take a look at that in the 5 minute. So, so I'm pretty sure this is the same exact trade I took. Stop loss up here. We get this fair value gap here and this order block. Price gets rejections off of there. We get a break of structure. And then I set my enter my trade, set my take profit and stop loss. I don't remember to be sure, but I think my stop loss was up here or somewhere. I can't quite remember. Let's see. It shows me on here. Yeah, so this was a pretty decent trade. I thought the risk to reward was like a 1 to 4. Um, So my stop loss might have been a little lower. I see if you put it right there on that order or fair value gap there, you would have been stopped out, or that was the order block. It was right there or something. It was above that order block just a little bit because I knew orders would likely get filled there. Then I targeted areas of more liquidity where price could reverse, so I went to this high. I could have ended up going to this 4 hour low, or this is low actually. I could have went to that 4 hour low for an even better return, and price did end up hitting that. I couldn't figure out how to take partial profits. This is a new futures account I'm using, so if I figured out how to do that, I probably would have took 75% out here and left 25% to run, something like that. But ended up making $1,000 on this day, so this is a pretty good day. Um, but yeah, that's pretty simple strategy. Um, where'd my thing go? Pretty simple. You're just looking for, we'll go over it again. We're looking for daily bias. So what's the trend? Is it down or up? Because that's what you want to trade with. Then we mark the highs and the lows on the 4 hour and the 1 hour. Then we don't do anything till market opens. We look for a 1 hour liquidity sweep after market opens. So we're on the 1 hour time frame. That doesn't mean it has to be a sweep of the 1 hour high. It can be a 4 hour high or low. We're just looking for a sweep of that after market opens. And then we're going into the 5 minute and looking for a 5 minute retrace. So we're looking for the sweep of liquidity, a move out of it, and then a move, or not a move out. It doesn't have to move out of it, but a reversal, and then reverses again. And then after that, we're going to the 1 minute time frame. Then we're looking for there's more confluences you could use, but I'm looking for a fair value gap or an order block in order to enter. And then alpha that fair value gap or the order block. Then I'm looking for a break of structure. And then after that, you enter the trade, say your take profits and stop losses, and let it ride. Don't touch it. Don't change anything. You say your stuff. You stuck to your rules, and you'll win. So yeah, just figured I'd share my strategy, maybe how some of you guys got, um, help you turn profitable. I'm still working on it, but I'll get there. I'm not worried. I'll keep putting in the work, but figured I'd help some of you guys out and share my strategy. See ya.